All right. Well, welcome everybody. This is CyberBulls, and lots of topics today. So first of all, there was huge drops on Thursday and again on Friday with the big Fed move of increasing the interest rates. So that brings us to the topic of momentum trading. So is there a way to know when it's the bottom and when to make that move? So I personally did not make that call correctly last week. But what's very amazing and what's really cool is that both Christian and Xander predicted this and they anticipated this to happen. So I need to find out how and why you guys keep calling it correctly. The other topic I want to talk about too is it possible for us to be both investing and making money, but to do that ethically and morally and, doing it what's good for the world. And I just want us to remind ourselves, while this show has all been about Tesla investing, we want to remind ourselves that this is something that's good for the mission, and this is good for Tesla and why we're committed, the real why of why we're all here. So thanks everybody. I appreciate you joining us today. And again, if you're on YouTube live, please send us questions. We're going to be able to address some of that later. Let's get right to the big giant move that's happened Thursday, Friday, big fall. Christian and Xander, tell me what happened and how did you guys know it was going to happen, and why did, even I was your friend, how come I missed out? Why didn't you tell me this was going to happen?
Yeah. So Herbert, so we talked about this kind of last week. The Fed is super hawkish, and again, this is knowing the future and more, I think, what's going to come. And what's came. And like I said, sold a chunk of stuff, a lot of leaps. And I said that I would use that money to now come in under, which I'm doing now, to buy shares. And I've also added more leaps at lower levels. So yes, it was a great little trade. It worked out well. Again, it just was what was in front of me. The Fed's super hawkish. We had that huge upswing. And I said, well, I'm chopping somewhere because this doesn't make sense to me, because the market, I was going to react negatively. And that's what happened. And it, for the last couple of days, it continued. And we saw Tesla go all the way down to 270. And now it's rebounding and it's outperforming again today. So again, it was more of just using my experience in the market and knowing how maybe markets will react to certain news by the Fed, and then just going with my gut and sticking with it, and it played up.
Okay, yeah. It all makes sense, Christian, but explain to me the timing, okay? So, I mean, you and I both watched that day on, was it Wednesday, when he was out, and then it looked like it was, I thought it was in the clear, and then it didn't really crash until Thursday, Friday. Well, I thought that there was a quick reaction. The market would actually get ahead of that. How did you know that it might even be delayed by a day or two? That's the part that, and then how do you know if it was delayed and the market reacted, why is it going up today? Like, is the world no longer going to die now? What's going on?
No. So this is what I've learned. So these are great questions. So yeah. You're moving where the puck isn't. So when let's rehash it a little bit. So when the Fed announcement came, just for the audience that didn't hear it, the market was all over the place, but it turned green at some point, and like the Qs were up 2%. Tesla hit a day of high. I think it was 810, 811, 812. And we hear Powell. I'm listening to Powell and I'm watching my screen. I'm saying, this doesn't make sense. He sounds so hawkish. I think eventually the market participants, closer to the end of the day, they're going to sell this off and everything's going to get crushed. That was just my gut. Okay. Yeah. So before it starts dipping, I see green. Have to react right then and there. I don't know what's going to happen, but and it was a chop. So I chopped at 810, and we had Tesla down at, what was it? 270 in a couple of days. So I'm using a lot of that money that I sold on those. We talked about it.
Are you buying now?
Shares, and I'm riding it back out, and I'm buying it back up. And because Tesla, it was a temporary market dislocation from the news. The Tesla story is still intact, but because Fed and we see bonds keep going up and up, the market is re-rating and discounting a little bit more, and bonds up, they're discounting growth stocks a little bit more. So Tesla at 310, the market's saying, no, Tesla belongs at 275. But now, when earnings are coming out, we're going to get a strong earnings, the more they re-rated, saying, oh, wait, after that strong earnings and deliveries, Tesla's worth 307. So this is the way you have to think about it. This is the way I think about it short term. So it's just me. But we love talking about it, but long term is the way. But you asked me about what I do, my little thing, and this is how I think about it.
It's all luck, buddy. It was all luck.
Yep.
Fine, I'll be lucky all my life. I told you that. Take it all day.
I don't accept anything you said. Go ahead, Xander. What did you think?
I agree. I think it was really about what Powell was saying, and the feeling you get that they're not going to back off and let the markets price in or react to inflation and commodity prices coming down. So I kind of did the same thing going into it.
I know you did.
Right, trimming off those leaps that I purchased lower down. Take those gains, even though they were leaps out to 2024, some were out to spring of 23, and then I'm uneasy now as well. So I'm actually, even though I was picking stuff up on the way down, I chopped all of that off today. So I closed those leaps at a slight profit or break even. I even closed some of the puts because I have this feeling that Tesla will get dragged, even though despite the fundamentals, I think that it's going to be rough out there, right? We're seeing it. So I don't want to deploy all the cash, right? If you're going to have like I said, like we always say, not financial advice. This is just what I'm doing. Most of my position is shares, straight shares that are just running, and then some some things that I've had for a while that are just they're continuing to run. So, but I'm going to be patient and just wait for the world to figure stuff out. And then once I feel like we're in the clear, then I'll start.
Okay, very interesting. You're saying this when today the market looked like it was either at least Tesla was in the green, and then we're all getting excited about the production numbers coming out in just 4 days from now by October 2nd, and yet you're still preparing yourself that there's going to be huge choppiness. And there might another crash might happen. Not crash. I don't know what the right word is, but some sort of downturn again, right?
Yep. Well, look at the S&P. Look at the Nasdaq, where we just hit a new, if I'm not mistaken, a new low today on the S&P compared to June. So that is that correct, Christian?
Yeah. So I love what you're saying there, but I'll take a little bit of the opposite a little bit. I understand everyone's so chopped a lot, but now we saw our performance on Tesla today, and we were going now into the deliveries, and we know Tesla's probably it's going to be a record. It's just how much of a record is it going to be? 360, 370, 375? We don't know. And we got AI day, and this is kind of my thesis, meaning I think Tesla after this dip now can grind higher. And Herbert, we talked about this like months ago, and I said Tesla would grind into the year with the earnings. Just doing the basic math. And this is just for the audience again. If you just do a simple 450 on Tesla and you give it an 80 multiple, you have a 360 stock price. So you can contract the multiple by 20%, but the earnings is going to be so strong that you have a margin of safety baked in. That's why I love Tesla here. And I think that's why Tesla's outperforming again today by a lot. I don't know where it closed, but it was up like 2.5% before I came on air, and the Qs were pretty much flat. So I get what Xander's saying. And I'll just say this. I'm more nervous as Tesla rockets. So Tesla 340 is more prone to a drop. Tesla at 280 to me is more value, right? Because it's back under 300. So these are the little things, like long-term investing doesn't matter, but if we're talking about shorter term, I'm getting more comfortable at these levels under the 300, then over 300, we start getting extended to that multiple until I see the earnings drop and that multiple contract where we could succumb to a drop. But as we stay lower, this is more comfortable for me to dollar cost average and gain shares for the long term.
All right. First of all, I just wanted to shout out to David Vela. It was his comment last week and said more on momentum trading. So we're going to do that. That's what we are doing today. So let me share a little thing here. where, this is from Harmony Connie, and he says, the biggest mistake you can make when investing is to think that you're smarter than the market. It's almost impossible to time the consistency. You will miss out on great opportunities if you do this. Simply dollar cost average into high conviction stocks and let your position grow. I'm sure you guys cannot counter that. That is probably true.
Yes.
But do you think you're smarter than the market?
Sometimes, yes.
Oh,
No, I have to say it.
Yeah.
Sometimes, yes.
Yeah, well, sometimes the market is irrational, right? And reactive, and you have algorithms that are reactive. So it just kind of depends on what we're talking about. If you're if you're looking at in January, you were looking at FOMC meeting minutes, like a Beat Kevin or someone, right? They knew they had more information where the rest of the market kind of hasn't digested. We have recently become experts in in the macroeconomics, but back then no one was really paying attention. They were just listening to the Fed. Inflation's transitory. So I think at some points you can go with your gut and make decisions for yourself, whether you want to be risky, right? That's what I'm saying, because I'm taking some of the risk off the table. I'm not doing some of these leveraged plays, but the rest of the position, it's exactly this. It's just dollar cost averaging as some new money comes in, instead of buying these leaps. Once you start getting a little bit lower, I'll continue to grow that position, but I want to save the money in case we do get that big downturn. I'll go into some back into those leaps, if that makes sense, right? That's the new strategy Christian taught me. Go ahead.
It makes sense to me, Xander. It sounds like I'm rubbing off on you.
You are.
Well, okay. Well, let me share you the statistic you guys might not know about, and I'm going to just hit you.
Statistics.
Oh no, you don't. I'm going to hit you hard with this one.
We talked about it last week.
I'm going to hit you hard with this one. Okay. So a Wall Street Journal article came out, and they said that buying the stock market dip is backfiring. So this year, it's the worst time for anybody who's trying to buy at the low since 1930. Since 1930, okay? So basically what they're saying is that this year specifically, instead of rebounding after a tumble, the stocks have continued to fall. They've been burning investors who stepped in to buy the shares after they thought they had a sale. So the S&P 500 has dropped 1.2% on average this year in the week after a one-day loss of at least 1%. So after people think, we've hit a low, it's gone even lower. Now, you're telling me that you're still feeling like you're able to gauge on which day, which week it's going to go up and down, and you happen to make the calls correctly this week, which scares me. Yeah. This is scaring me.
I lose my train of thought, I got to respond. So you're actually making my point for me. Yes. What? You're making my point for me.
What?
People have getting crushed by the dip. I haven't been buying a lot of dips. I sold. And if you remember, when Tesla was up near 1,200, I was like in all cash, 100%. I'm up for the year. So you're making my point for me. So yes, I thought we were at a macro top with the feminine ready to crush. And I've been picking my spots. If you remember, we've had bear market rallies of like 20% this year in spots. So when we go low down, I start buying. And again, it's hard to time it all perfect. But what I'm saying is you could catch local lows and you could catch local top and then out of it again. So what I'm saying, it's not easy, but it is doable if you're focused on it. So I agree, long term, the way to go is this. But in my position and the way we've been talking about, I'm a little bit advanced stage. I can't sit there 100% in stocks waiting to get crushed. Okay, be down 50%, 70%. I'm not playing around with all that junk that went down 70, 80%. I got my core Tesla position. I've traded around it. And what I'm saying is you're right. So your evidence is backing me up, because now I could be lucky because I did sit through the 08, 09 crash. I had a significant amount of money, but I was much younger and I was still very productive.
Now
and
you're
I was
smarter.
able to weather that. But that's different. So now maybe I'm in a better situation because I am so leery. When you have a bigger sum of money, you watch it more carefully. and you're less likely to sit through a 40, 50, 60% decline, because the old math, if you're down 75%, you need to go up like 200% just to get back to even. Someone should teach that to Kathy Wood, because she hasn't learned that lesson.
Okay, let me ask you this question then. Okay, guys, since we are all about making sure that we make the right decisions based on fundamentals and metrics, what is the metric that you are using to decide if a market is head to the bottom or high? Or is it this feeling I have, this butterfly feeling I have in my stomach because of my experience that I've been having for decades? Is that what this is? Is that what we're talking about?
I love your line of questioning. I know Alexander get in, but I can't let that go unthwarted. So listen.
Okay.
So in 2021, we got AMC going to $1 to whatever, 60, 70. Okay, that's crazy. We got all these meme stocks, GameStop going up 1,000,000%, right? All these things are happening, right? The Fed is loose as a goose, and they're printing money. They're sending out stimmy checks. Like, you don't need to be a rocket scientist when all that's happening. And now the Fed is like, okay, inflation's coming. The party's about to crash. And we see I've been talking about it for the last 12 months, 6 months, that the Fed was going to come in and raise rates like a maniac. And that's what they're doing. I don't know exactly to what extent. They're going more than what I thought. But I knew it was coming, and this was not sustainable. GameStop at these huge things, AMC, even quality stocks like Apple, Google, trading 30 times, Costco trading 50 times. These things are not sustainable. They're great companies, but at some point, valuation comes into play. Even for Tesla, trading at 200 times earnings, no matter how great you are, it's going to come in. So I don't want to sound like I'm a smart genius. I'm saying the writing was on the wall. If you choose to look at it, then you'll see it. If you choose to ignore it and say I'm a long-term investor and I'll let my money draw down 80% and I'll wait 5 years to get back to even, good luck with that strategy. I don't play that game.
Christian, check your audio. It was going in and out. Something's weird's happening. Just double check.
It's my animation. It's my animation. You got me all stirred up, Herbert, with these crazy questions.
It was switching between your headset.
I didn't hear any metrics. I didn't hear any metrics, but okay. Lots of talk, no metrics.
I'll give you some metrics, Herbert. I'll give you some metrics.
Okay.
So when you zoom out and you kind of look at moving averages, that's a good metric for me to see that whether the market is frothy and going wild, and then there's a fundamental shift, right? What Christian is talking about. When the Fed stops injecting money into the economy, however they do it, right? You go from quantitative easing to quantitative tightening. That's going to have the reverse of what you saw, right? Where you saw money flowing into the market. Everyone can get access to money. What are they going to do with it? And you could look at like statistics that for every dollar that was injected into the economy, what is it, like something like 91 cents or something preposterous went into the stock market, increased by that same amount. So that is unsustainable, right? And same thing with real estate prices. So you want to look at metrics, you want to look at data. I look at, if something goes up too fast, yes, you want it to keep going, but it's a little bit too fast. If you recall, Christian said this, that we went up so quickly with Tesla going into the Fed meeting, and we held up so well that, in my mind, when I saw Apple start having issues, become the biggest short, the market is saying something, and you have the yields for bonds continuing to go up. So now is there, if the thesis early on was there is no better place than Tesla or equity, because you weren't getting paid to hold cash, or obviously inflation. So then if the market starts looking at it, oh well, I want the safe thing. I don't want to play with these volatility up down with wars and all of this stuff. So that's the kind of metrics that I'm looking at, and obviously real estate as inventory starts climbing, as price reductions, as time on market starts increasing. Those are all indicators to me to say what can the macro do. Now Tesla is again a unique animal that we are seeing. It's outperforming in the opposite direction, right? It used to be beta 1.6, and like yesterday it traded like that, but then today it's totally different. So I'm analyzing that. I'm going, okay, well, that's great. So Tesla's shot out of a rocket this morning. I sold some calls in the morning, closed them a little later, made a couple of bucks. And so like I look at it that way. I continue to analyze it day to day to see if the market's changing. You are correct, though. We are going into a potentially big catalyst with AI Day, depending on what they show. If they show off a robotaxi, you know, and they give you a timeline, we might be on a path towards the numbers guys being able to do some analysis. So it is kind of dangerous to let go of my leaps, but it's not dangerous in the sense that I'm just going to miss out on some gains that that I'll be perfectly content. Right, my measuring stick has changed. I'm not looking for 100% gains at this time. I'm happy with 20%. I'm happy with 10%, as long as I'm outperforming the S&P. So I know that was a long rant, but hopefully,
no, at least you gave me some numbers and metrics that you're looking at. Thank you for that. But here's sort of the way I'm looking at it. Okay, so I at this point I cannot argue with the two of you because you have been it was kind of true. So I got to kind of admit to it. You've been calling it, both of you, correctly for the last month and two that we've been talking about this. However, I actually think that it's riskier with what you're doing. Now, you guys are both, let's call you kind of like more above average investors. You know what to look for. You know what to study. So in your mind, you might be less risky. No. But in my mind, people can get hurt. And we all know this. And that's why we've always say that every person is different. Don't take what we're talking about. Each one of us are very different. That's why we're doing the show. It's kind of fun because each of us have a different need, different assets, different requirements of where we're going. Oops, there's my phone ringing. But so what I'm saying is that actually from my perspective, it's more risk if I try to time the market. If I just, with my perspective, which is I don't need to do anything, I'm going to look at it again from 2-3 years from now. What's the point of timing the market? In fact, I might put myself in more risk. Yeah. So if I just wait this out, and sure, it plummets goes down, instead of trying to react to it and then don't panic, which is what so many investors do, and they try to sell when they're falling down, you don't do that. Just leave it alone, forget about it, come back. The key thing is, do you think that your money is in a company that has not changed its fundamentals? Its sales are going to keep going Absolutely. Up. It's still very much an earnings machine. All of that matters. Now, that's what matters. The market matters, but actually doesn't. Because if you look over the years, it always continues to go up as technology is improved. So I think it's actually more risky for me if I try to time it, and I don't feel confident that I can. And I'm not yet convinced that you guys can time it perfectly, and not perfectly, but at least more often than not. I mean, right now, I just think it's still voodoo.
I love it, Herbert. Yeah. So what I'll say is I have to put context to this.
Okay.
What I did we've been talking about this for 9 months. When I chopped near 1,100, 1,200, that is called risk mitigation. I took risk off the table. I think you're getting it backwards. Oh. When you sell something, you're taking a profit after 20x. That is not risky. That is called conservatism. So I don't know where you're getting this risk. Risk is, I think it's going to go up another 10,000%. I'm going to miss it. So what? I still got my money. Like, I think you have it backwards. You're saying it's risky because I might miss more upside. I'm saying, no, I've already made a lot of money, and now I can wait a year or two for the market to regain its balances and catch the next ride up. So actually, I think you have it backwards. I'm the one being prudent, and you're the one taking the risk.
I'm talking about when the market falls.
Herbert,
what are you doing? Last time we talked, you said, it's time to panic when the market falls.
No,
and I'm like, you never panic.
Xander, you're going to have to set it straight. We've been talking for 9 months. He's twisting the whole story.
I will. So Herbert, you ready for this? I agree with you. right? It's risky in the sense that if you're like me, who just sold the house at the end of
Yeah.
2021, who's just making the play on what I consider a safer than the rest of the market. If you guys were listening to Emmett and Matt earlier, that they were talking about this question of playing the leaps game is. It's an interesting game. So you just dipped your toe into it and you're sitting on a nice profit. So you think, oh, it's okay. But if you see that downturn and we go retest that 620 real quick where you bought it, what do you think is going to happen to your 100% gain?
Yeah, it's opposite.
It's going to deflate so quickly. So when
Yeah.
when I'm talking about like momentum investing and agreeing, I'm talking about just a small portion of my portfolio. I agree with you. You cannot time the market perfectly. That's
Thank
the
you.
word people leave out, though, is perfectly, right? Because you can do momentum. Christian isn't day trading this thing or even swing trading it. He's looking at like big macro world-changing events, and that influences him to get out. He sees China shut down. That influences him to trim or get out or whatever that is.
No,
That but if he's right, if Twitter
it's Tesla.
if Twitter
It's a
happens and that influences
doesn't
him,
matter.
well, that's okay.
Fundamentals.
So then,
Fundamentals.
Herbert, I'm not as young as you. I can't sit through 50% declines.
It's not about
I can't
age
sit
here.
through
It's about
50%. I'm
personality.
retired. I need to protect my money and still let it grow.
Isn't that
I can't sit there
Wait.
and just get shellacked like some people.
Yeah, Justin wrote there, selling calls and then having Tesla rocket to 400 and never come back down is very risky. And I completely agree with that. It's listen to what I said. I've kind of been watching how the market trades, and Tesla rockets in the day, and then I just sell some calls, what I think is a safe position for the end of the week. Because is there going to be this pile-in? Yeah, that is the risk, right? That I might have to let go of some shares. But I'm day trading those things. I close it as soon as the tiniest little dip comes down. I scalped $250 today, and I was so happy because it was an easy thing. So go ahead.
Can you guys answer this question from Justin? You guys really think Tesla can 50% decline from here? Like for real, for real?
So let me take that. No, I'm bullish now. So I feel like I have to rehash the whole story. Like we've been talking about this for 9 months, and Herbert, you're acting like you have amnesia, and we have to do this whole thing again.
Sorry.
So I bought Tesla in 2019. It ran up 20x.
Yes, we know.
Well, right.
Rub it in. Rub it in.
Rub it in.
So we're going to have to do it again. You hate when I tell the story, but you want to keep challenging me. So then I have to keep telling the story.
We already know that you're smarter than the market. We got it.
No, I don't think I'm smarter than the market. What I'm saying is I don't care if I'm smarter than the market. That's the part you're not comprehending.
Okay. I'm listening. Go.
One last time.
Okay.
If you have a stock, any stock, and it goes up 20 times, there is nothing wrong with taking some off the table and watching what happens. And if it dips and you get a gift, to then rebuy it because you're getting it at a more attractive valuation. There are times in the markets. I am a former financial advisor. I have been watching markets for 20 plus years. I look at the market now day in, day out. I've been watching Tesla stock trade every day. I know kind of how it moves. I can't tell exactly what's going to happen, but I can do some macro plays. And I know when certain things are about to happen, I believe if it's going to happen, this will then happen. And then I take an action accordingly. I may be wrong, but I don't care. If I'm wrong and it goes up another 10%, I miss 10%. So what if I'm trying to protect a 50% downside? So what I'm saying is I'm just using some basic judgment that anyone can do. And all these sayings, I agree with them. I've said these sayings and I love these quotes. But when you have X amount of dollars, and maybe it's a lot, and you can't, and maybe you're a little bit more advanced in your age, you have to be a little bit more prudent. So I don't care if it's an investment of a lifetime. If you've already done really well with it, it's okay to take some chips off the table, see what happens. And if you get a gift and it comes in 50%, to then redeploy. Again, I'm not in taxable accounts, so I have an advantage over most people because I don't have to worry about in and out. I don't have to worry about wash rules. I don't have to worry about paying tax on anything. So I have an unfair advantage. So it's just
Okay.
the breaks of the game.
You actually sound really good. I'm getting you now, buddy. I got it. You're actually less risk. I got it.
Yeah,
Because you
actually.
actually are fine. Many of us are getting greedy. We think Tesla's going to go to the moon.
Especially
We
you.
want to get all the whoa. Especially me. Especially
I want to
Xander.
make 100% on my
Yeah.
leap.
I did say that. But yeah,
You chopped the leap 60, 70%. I held it for months and then I
Okay.
chopped them. And then,
Okay.
but here's the thing, Herbert and Xander, I'm just saying, when Tesla dipped from 310 in that day, when I talked about the Fed was hawkish as hell and the market was up and I understand it, so I was cutting somewhere. Well, where did Tesla get to? It got into 270s, and I didn't time it perfectly, but it's there. I don't need to make it happen. The market made it happen. It went from 290 to 285 to 280 to 270. So in these lower levels, I don't care if it's 275 or 283. It's much lower than 310. So I bought leap contracts, and then I gave myself more time. I moved out from June 24s, and I picked up the January 25s for almost the same price I owned the other ones at, or less, because the stock had come down more. So, call it lucky, call it what you want, but that's what happened. So then I just do it. So I don't know. I don't know what to tell you. Like, I agree with you long term. If you have 10 years and you care about taking 60% drawdowns on your capital and you could sit there for the next 10, 15 years, that's great. That's not my situation. So I have to play a different game. But I love the conversation.
So, quick response to someone in the comments. They're asking, how do I know to take the tax hit on? Yeah, there you go. So how do you justify taking these short-term scalps and being profitable against the short-term cap gains tax? There was a YouTube video I watched a while ago, and it talked about stop trying to protect your how much taxes you pay, and just focus on making more money. So these scalps are money that I wouldn't otherwise have. So if it costs me whatever my tax bracket is, and so I tell you that the 250, but it's actually less. Well, it's actually less, and that's absolutely fine. I'm happy to pay. Well, not so happy, but I pay my taxes, and that's just the way it is. At the end of the day, you're still you're still profitable. The timing aspect of it is very difficult. At the end of the day, we can call it luck, right? We should call it luck, but there's an art to it, and there is a skill to it. And I'll give you an example with real estate. If you look at real estate, and because the Fed is pumping money into the economy, right, and it's cheap to borrow money, right? Let's get off of Tesla for a second so people could cool out. You're and you see the prices rocket. And then the Fed starts telling you, right, that it's inflation is transitory, it's all of that. So in my mind, I started thinking that there might be a change coming. So it's time to, in my situation, I wanted to raise money. So now you start seeing, so I sold, and now you start seeing exactly what I was worried about, which is, you reach a saturation point where inventory starts coming up, and prices, the building starts occurring because lumber is cheap and copper is cheap, and now your real estate values start coming down. Now, is that luck that I didn't time it? That I timed it? No, because I didn't time it perfectly. That same house is worth 10% more, but at the end of the day, it made sense for my specific situation. So I think this notion that you can't time the market, I don't think it's accurate. Right? You have that chart that you showed the other day about fear and greed and capitulation and all of those things. So I think it's important to kind of zoom out and then do that,
Okay.
if you're willing to, with a portion of your portfolio.
I'm going to kind of address both of you. Won't call it an attack, but I'll call it a response to both of you. Okay. So the first one, Xander, is that I think we need to find the statistics, the metrics of what percentage of day traders or options traders actually do well. There's this video that's going around right now, and this caller called into this host, and she said that my husband lost $150,000. Okay.
Yep.
It's very dangerous, as we know. Now, you are different. You've
Why?
explained how you've done things because you
Can you
played the
explain
bank,
it?
you played a casino. I can now explain what you do
Good.
differently than everyone else. And people don't just say this word margin is so dangerous. It's not the case. It depends if you're playing the casino or you're playing the gambler. It depends on timing and all that. I gotcha. The other thing with you, Christian, let me tell a little story. When my daughter wanted to get a dog and puppy, and they've been like full force asking me to get a puppy. And my wife and I said, we don't want to have a dog. And we almost came to decide it. And we just finally kept always saying no. One day she came up to me and she said, but Dad, this is the only time in my life that I can grow old with my dog. And that's the only comment that ever made me really pause and think, oh, you're right. So in your case, Christian, the only reason I can counter with you is that we are talking about Tesla. And Tesla is at the moment right now, it's a generational company. There's only one time in its history when they will have 2% of the EV market with 4 gigafactories at this time. So I'm not willing to let go of this potential gain and growth.
Yes.
Okay.
But that's why
Absolutely.
he's bullish, right?
Let me say something. You know timing the market. I wanted to talk about Tesla fundamentals. So I need the audience to know. I think they do know, but I need to recap.
Okay.
I am a bull on Tesla. I love Tesla here. For 9 months, we've been talking about our spaces and our YouTube channel. Go back and look at the videos. I'm a bull. I'm saying Tesla can fight through this macro. It's become an earnings machine. What we're talking about and what I've been doing is just trading around the edges because, like you said, I had some leaps that are doing well. But Tesla fundamentals, you're not going to find, well, there are bigger bulls than me, but you're not going to find another bull like me. And I'm just a bull on the EV business. I think the margins are going to explode. I think the earnings are going to explode. I've been talking about Tesla outperformance for the last year, 6 months, 3 months, and today again it's outperformed after a little hiccup, but the whole market took a bath. So we're on the same team. You're asking me about questions, what I do. I'm just explaining it to you. So if people out there get value from it, great. If people say that guy doesn't know what he's talking about, that's great too. Like we're just having thoughts and share. But the Tesla fundamentals, I would love to talk about them because that's what I do day in, day out. It doesn't mean I don't use some market opportunities when I see them, some dislocations, to take advantage of it. You can still be a Tesla bull and trade around some edges. And if you have big positions and leaps and you have nice profits, there's nothing wrong if you're not going to exercise those shares to take the profit. And then if Tesla falls, redeploy them into shares or leaps longer out. So I don't see anything. To me, it's a very conservative strategy. I understand day trading. I'm not day trading. I'm playing a long-term game, but I'm playing a macro game. We had a raging bull market. After the pandemic, we had a V shape, and we had stocks like Lemonade, which one I love, go from 60 to 180 in a heartbeat. And now it's trading at like 20, 21, right? All these stocks have been crushed. Now, did I buy Lemonade in that euphoria? I actually did, and I made a lot of money. Did I ride it all the way down to 20? No. I was chopping because it wasn't rational. You can't sustain a valuation when they don't have any earnings and the sales was trading like 80 times sales. That's not normal. So when you say you can't predict it, yes, I can predict it. A company trading 80 times will not stay trading 80 times. Eventually, the market will come to its senses and it will bring it down. That's going to happen. Yeah.
Christian, you scoffed or whatever when I said that I'm skittish about the local timing of staying within those leaps. So is your thinking there that we are going to have a multiple compression because the earnings are going to come out at the end of October and Wall Street is going to it's going to have to if they want to continue. Right? Are they going to start piling in, or what's the thinking?
Yeah. So the thinking, and I didn't stop. I like what you did. I thought what you're talking, and we'll get back later, and you can give me the details. But I think what you're doing is prudent. What I'm saying is, I believe that the multiple compression for Tesla has already to some degree happened. We're trading at 100 times trailing, and on a forward basis, it's much lower. So when I give you these little facts, I don't know if anyone listens to them, but I see an earnings power. So when I say at the end of 2022, the end of this
Mm-hmm.
year, Tesla's
Mm-hmm.
going to come with a Monster 3 and a Monster 4. If on a
Mm-hmm.
conservative side, if you say they're going to earn 450, the multiple contracts 20%, and it goes from 100 to 80, and you still have an increase in the stock price from 280 to 360. That's my margin of safety. I don't need anything else to happen other than Tesla put up 360,000 vehicles and 400 plus in Q4, get your 20% operating margin, which I all think is doable as long as the factories remain open. So that's always been my mantra. As long as they can operate their business the way they need to, I am great. But you're right. If certain things happen and Shanghai shut down for a month, the stock's going down. So you could sit there all day and say, I'm going to hold it, but okay, it's going to be lower than where you were before if you don't sell. It's just going to happen, man, because the earnings are going to get crushed. Wall Street doesn't wait around for a quarter to wait to, oh, well, it's only temporary. The stock price will get hit in the short term. Now, if you don't want to play the game, I get it. You're long term. And again, it depends on how much money you're playing with. If you're playing with 10,000, you're building, you want the price to be lower because you could buy more shares. But that's not my position. So I'm talking about it something different. If you're young and you're trying to acquire as many shares, you want Tesla to come in more so you can get more money to buy those shares cheap, waiting for the big advance later down in your life. So everyone's looking at it
Can't
from a
hear
little
you.
bit of a different way. Yeah.
We lost you.
Well, the space ended. What happened there?
Okay.
Switch it to the YouTube stream.
All right, let's. Yeah, interesting. Great rants. Let's not call it a rant. No, you're making sense. You're making sense, Christian. I really appreciate this. So I got a question for you guys, though. Okay, because you guys were both talking about Warren Buffett last week, and I told you. The question I have is like, would you invest in a company if it didn't do anything good for the environment or wasn't good for the mission, but you're going to make you a ton of money? If you knew that there was a brand new, I don't know, oil company that's coming out and you got to get in early, would you do that? Because you'll justify in your head, well, I can take that earnings and profit and I'll spend it for nonprofits and do good for the world. Or do you want to now invest your money on things like Tesla that has a great mission that is important? I want to remind people why we're here, but I'd be curious what your answers are.
Yeah, I'll jump in first. I think that now that Tesla is an option, my thinking has changed. But at the end of the day, I channel Kevin O'Leary and I say, we're talking about money. So it's a great question. I'm glad that the company that is available to invest in, that I think is going to be the biggest company in the world, is a green company that manufactures primarily, or at least it started in the United States, and so it's a great company. So would I? Yes. Are we back on Spaces?
Yeah, we just click on that and try it again. I don't know if it's worth it.
Yeah, I don't see. Did you send the link?
Or? Let's just keep talking. Yeah, let's just keep going. Let's just finish this off. We got 15 minutes here. Let's stay here.
Okay.
All right. So yeah, so you're saying?
Okay, I got to back up. I'm jumping in. So, whoops.
Keep going. We got a lot of people here on this.
I'm all Spaces. You could just do.
Yeah,
I think I'm all Spaces.
Okay, go ahead. Keep going.
Okay. So I might need to unmute on Twitter. Okay. So back up. But anyway, so I think I would invest in another company. But I would have to compare it to something like Tesla. If you're saying that a company that's going to be bigger than Tesla, that doesn't have, or has the similar type of risk, then yeah, it's something I would consider. Does that make sense?
Yeah. What about you, Christian?
So I love Tesla. I love it as a long-term investment. There's other companies that I would invest in, like newer companies that Tesla has a lot of growth left, maybe a 5x, 10x or more, some Uber Bulls, but there's other companies that I like to see that are young,
Real
like
quick,
a Lemonade.
Herbert, unmute on Twitter, and then Christian, jump back in if you can.
So yeah, there's companies like Lemonade that are exciting to me because they have a lot more upside if they are able to do what they need to do to be profitable.
Yep, it crashed. Okay. All right. Well, the reason I want to bring this up is I think that, the reason we started and the reason I did with Tesla is because of the mission, right? That's what's driving me first. I invested in Tesla when it was so early, when I knew that it might fail, because I wanted to put my money in here. And the fact that it kept growing and the fact that now it's one of the potentially best investment vehicle that there could be in a lifetime, that is a very possibility. It makes my heart, it makes me feel great, makes me feel so warm and good inside. But because that's the reason I was driving. So I hope that we all kind of remember all we'd ever do in the CyberBulls is talk about money and the stock going up and down and how much money we're all going to make and how to time it right. But I hope that we all remember that the real reason we're doing this is the mission. And that, I'd like even to go through each one of these things. Like, there's just so many things that it's going to do wonder for the world, like solar energy and the battery packs, and then of course electric vehicles. You can debate me if robots is going to be good for the world or not, but in general, people think that it's going to actually remove and remove the chance for any poverty left in this world. So, doesn't that drive your investment? I mean, we all know that there's the millennials are now putting all of their money, or a significant amount of it, on
crypto?
Companies that do good for the world, right?
You mean in crypto?
So I agree with you, Herbert. I think if you can find an investment like Tesla that aligns with your missions and values, that's great. But I would just be careful with that, because an investment is different from what you're passionate about. It just happens that Tesla kind of aligns with a lot of people's values and mission, and it's an amazing investment. So I don't think you would really find that on a lot of other companies. This one just happens to align. Now, if you're already like super rich and you got hundreds of millions of dollars, of course you can be philanthropic and give your money to companies you want to see change of the world.
Disagree. Sorry, buddy. Disagree.
Well, Herbert, I think that like what attracted me to Tesla is opportunity. It wasn't like, I mean, I hold on. Let me frame that. I'm a green guy.
It just cut me off like crazy. I just let that fly. Go ahead.
I'm a green guy, right? I I use VOC, no VOC paint. We use the stranded bamboo. For the last decade, I drove a Ford Fusion Energy. I did the i3, then now the Teslas. So like my nature, it aligns with my view. But finding the investment opportunity was specific to the TAM. It's the addressable market that I see as, wow, this is the. Otherwise, it's too hard to time the market. It's also too hard to find the.
It is not too hard.
It is not. Yeah. Okay.
No, it's not.
Well, see, you're the expert. You could find Apple.
Yeah,
I'm the expert.
You don't need us on the show anymore,
there are so many.
You got it all figured out.
A tremendous amount of opportunity for going green and doing the right mission. The world is changing. We can make it, help change it.
I agree with you, but that's Tesla. You know how many solar companies started and are fly by nights, charging companies that have gone through the roof and are nowhere.
You're talking about 5 to 10 years ago, Christian. Today, the entire EV ecosystem are all going to succeed. It doesn't matter who you are.
Ecosystem. It's Tesla is the EV ecosystem.
No,
nobody
incorrect.
wants an EV. They want a Tesla. Okay?
Incorrect. Well, okay, that's not correct. The market is growing so fast that there will be many great opportunities for many other companies beyond Tesla. But solar.
Name one.
It's just now.
Name one. Name one.
I'm not like you. I don't go, I'm smarter than the
No,
market. I'm not going to say
smarter. I'm asking you to name a green company that has a great future like Tesla.
any company that's making batteries. Any company that's making batteries have a very high chance that they'll succeed, that their market is wide open for them, and
So like
they're going to be able to sell their
Panasonic,
products. Sure.
CATL.
BYD.
Okay, well,
Yep.
right.
Exactly,
Okay, well,
because they're going to sell to the wall, to the power of not only the cars, but again, the solar equation has flipped, right? Just was it last year that it's now cheaper than any other kinds of energy. So the game is over. And it's going to continue to, right? Moore's law. It's going to continue. Well, that's probably the wrong. It's going to be a Herbert's law, right?
I agree with you, but I'm like, so if you're talking about EVs, though, I think Rivian's going to have a terrible time of it. They're burning cash like crazy.
Yeah.
Lucid, I think they're on life support. All these other companies like QuantumScape, there was a battery, the valuation was crazy. They're not going to make like a profit for like another 5 years. There's so much speculation out there in all these industries that why would you want to go there and try to do something like that when you have Tesla right in your lap that makes batteries, that's
ask
doing
Elon.
Right.
Ask Elon what he would do, and what he's doing is trying to help. As he wants to help every company succeed, not just himself. But yes, I'm going to stay in Tesla. I'm not saying I'm not going to.
Because as Tesla shareholders, we want them to focus on Tesla. We don't want Rivian and Lucid to win. They need to win on their own. We don't want to help them.
Okay. We can do good, and as a group, all of us investors here, if we put our money in the right place.
Investing mainly is about money and rate of return. I may sound greedy. That's what investing is about. Investing is not about do-gooding. You can do good when you're worth tens of millions of dollars, and
you're so wrong. Okay. You're so wrong.
I think it's not a wrong. I think it's a difference of opinion.
So, Herbert, then
true.
Was Apple a do-gooder kind of company?
I do that. Absolutely. That's how I view them. Yes, they protect privacy. They increase communication around the world. Being able to have a powerful computer in your palm of your hand has changed a lot of people's lives, especially the people that are poor,
but
and
Herbert,
then they care about the environment.
Yeah. But you can flip side and say, well, it was an app, and now everybody's on Facebook and Instagram because this phone is accessible, and they're wasting so much time just looking at their screen and making pictures and selfies. I could play this game back and forth with you as much as you want. Investing is about rate of return. You're deploying hard-earned capital in companies. Yes, if they do something good, that's great too. But your number one goal in investing is to make a return on your capital. Now, if you want to invest and you don't really care about your return,
well, no, I guess you have a choice. You have a choice. There's like, I don't know what the number is. I just throw out a stupid number, like 1 million companies in the world that's that's available in the public markets that you can select from. And so why would you and then you go, how many can have this much growth rate and is very successful with all the right fundamentals? Pick the one that fits your moral compass, the one that's going to do good for the world, right?
I agree with that.
That's all I'm saying.
But I believe that I wouldn't fault someone who's investing their money and they think they can get the best rate of return with the less risk just because maybe it doesn't fit your little green world. Yes.
My little green world? That's your little green world too, buddy.
You do live in Seattle. You do.
Maybe you think that you're going to be long gone and you've got I got to get my cash out within 5 years and then I'm gone. I'm out of here. I plan to be here for decades.
Elon says it all the time. If we stop fossil fuels tomorrow, the world would stop. You need so as much as you hate ExxonMobil and all these things, the world would not function, and we would go back to the Stone Age. So you have to be careful what you wish for.
But but let me point it out to you that isn't it just a few short years ago that you said it yourself, all these solar companies are failing, all these EV companies are failing, and it's only now that they're getting their legs in place. We need to continue to support that.
I disagree with you. I don't think anyone's getting their legs in place. I think Tesla's the only one that has legs. I think Lucid's done. I think Rivian is the only thing saving them. They're backed by Amazon and they raised a lot of cash. They're burning more cash than Tesla does in a typical quarter, and they're making 1 million more cars.
I think you're being a little. You're not looking at China and all the EV companies there. There's going to be many EV companies around the world. They'll do fine. Tesla will win the vast majority.
Don't make any money.
Well, you got that huge market, you'll eventually get money, right? It's all about, do you have revenue? Do you have sales? Do they have manufacturing efficiency? Yeah. So do they have no money today? Sure, why not? But does that mean that I wouldn't bet against it, that they'll end up becoming very profitable?
I agree with you. I'm not against it. What I'm saying is people, I just want to be clear. People are buying Teslas not because they are in love with the environment. Some are. A lot of people are buying Teslas because it's the best
True.
product in the world. Okay. They're not buying it because they care about the environment. 80% of them. Okay. I'm just telling you, a lot of people, I know some people that own Teslas and they don't care. I mean, they care. They want the plan to be, but they're not buying it because they think I'm going to save humanity. They're buying it because it's the best product in the world. So I think, and Elon knew that. He says we can't just make a product and people will buy it because they want to be environmental. We got to make the best car. We got to make the fastest car. We got to make the best vehicle in the world because no one's going to switch from a gas car to an equivalent EV car, right? It's too much. They only will make the switch if it's a dramatically better product. And I agree with Elon, and that's why he's successful. Because not only is he trying to do the right thing, he's the smartest man in the world.
Now, how do I follow that? I think it might sound bad to just talk about money, and some people might think like, I mean, we're talking about thousands upon thousands of hours invested into understanding Tesla. I just posted something from YouTube Premium. Since April, I have over 1,000 hours of watch time and listen time. So you think about that. That's a preposterous amount of time spent learning. And why do I do that? It's not to learn more about how green I could be. It's to protect my investment and my family's investment. And it's to understand the red flags that might come up. And now I kind of share some of that, some of the learnings and just BS with you guys. But at the end of the day, I love that the company is green and it has Teslas and Tesla energy products that are going to be coming, and like we could talk about the fundamentals, but I don't think that's why people want to listen to us. I think they want to hear some of the the investment strategies or how we're thinking about some of these shorter term moves. So there's plenty of places to get conviction on the long term of the company. I hope that answers your question.
Yeah, I think so. Okay. Well, the good news is that we happen to have a company that is amazing in all ways. It happens to be fantastic for the environment. It happens to be the greatest investment ever. And it happens to be a fun company that has all sorts of different topics associated with it. So we have 3 minutes left. What is your prediction?
I think he's done with us, Herbert.
Christian's gone.
I think we killed the room.
Yeah.
Christian, I think he's gone because he's over here talking about dogs to Hadouken down in the chat. So I don't know
what's going on.
We're just you and I.
I'm just being real. I'm just being pragmatic and practical. I'm not trying to put on a show.
Okay. Well. Okay. So 3 minutes left, guys. So we have what's going to happen. Go for it. So you have always said that October 2nd, you're going to get production numbers. Are we there? Are we going to get I think we're targeting 360 volume for cars. Is that enough to be a catalyst for the stock or not? What will happen?
I'll give it 1 minute and then Xander could go. So 1 minute. Tesla Q3 is going to be great. We're going to have record revenue, record profits. Same for Q4. It's going to grind through a tough macro. The earnings is going to come through, which is going to contract the multiple. It doesn't matter because the earnings is growing so fast. The stock price could appreciate in a tough macro. So I'm super bullish about AI day and the business going forward. Love it. Go ahead, Xander.
I think deliveries are going to be record. I think just seeing how busy. I just picked up a Model X long range on Sunday for the wife. And it's thank you. And there were like 3 Model X's getting picked up, and I passed like 2 tractor trailers full of Teslas just on the short commute. So like, and I was poking around. I was like, are you guys busy? Are you guys busier? It seemed like they're, and the answer was can't tell you numbers, but we are busier. We're busier than usual, and I think that's all good. So fundamentally, that PE compression I think is going to occur. Will AI bot have an impact? I think so. I think so. I think
What?
yeah. I think you're going to have some. I think Tesla knows what happens when, and they always show you. You know, they give you a teaser that they were working on it, but that wasn't like an unveil. This seems to be an actual unveil of some sort, right? Elon's been liking last night all kind of robot hands. You had that. That guy posted that Cybertruck picture with the bot in the background. I don't remember his exact name.
Is Dennis Hong, by the way. He's Professor Hong at UCLA, the robotics expert. He's not just some guy, okay?
Listen,
A robot guy.
He's not just a robot guy.
Stuck in the data points I like.
Anyway, I think we need to give it to Warren. It's 5 o'clock.
Yeah.
All right, guys.
So thanks for listening to us BS, and
thanks everybody. Yeah, that's my tagline.
It's definitely
I get to
funnier.
say that. You can't, okay? See you later, guys.
Right
Thank you,
over.
everybody. Bye.
CyberBulls, baby.